Good afternoon to you, and thank you for joining us for another installment of Market Snack by Sarwa. This is Eamon Gebri, Head of Wealth Advisory. Thank you for joining us today. I'm just waiting for all the participants to join us, and of course, it is the first one through the gate. Really great to see you. I also have Abeda and Sari Hishi that's joined us today, as well as Joe Karam. Pleasure seeing you guys. It's been a minute. I took a couple of weeks off for a vacation. I'm back in action today, and I did miss you guys. So great to catch up with you guys again today. I'm seeing some familiar names and some new ones. I see here Drago Spectre. Drago, yes. Dr. Sami, great to see you. And Itchari and Mayamek 11 and Dana Bissar, thank you so much for joining us today. Again, for those of you who haven't had a chance to join us for our Insta Lives in the past, my name again is Eamon Gebri, Head of Wealth Advisory. I'm really happy to be with you today, and we've got a lot to cover. It's been a good couple of weeks since I've been here, so a lot to cover today, and maybe I want to give it just another minute before everybody joins on board, and then we can just jump right into it. It's Shari, hi, hope you're doing well as well. Thank you so much for asking. And FH Al Saadi, thank you so much for joining us as well today. And Sarah, much pleasure. And I hope everybody's doing well. Things are heating up, as you can see in the UAE. Weathers have already touched the near 40 degrees Celsius, point. I hope I'm wrong. I hope I'm right and not hasn't reached beyond 40, but I definitely feel it, that's for sure. So it's a lot warmer nowadays, more t-shirt weather versus sweater weather altogether. Bapari 121, thank you for joining us today. And I think it might be a good time for us to start because we've got a lot to cover, and thank you for joining us today. So let's start with, let's do a market recap. And we've always do this every single week, and it's very important to kind of start the conversation of where are we today on a year-to-date basis. So let's talk about the S&P 500, which of course is the world's most eminent index that everybody kind of refers to. Well, the S&P 500, no surprises there, is still negative year-to-date. It hasn't been a very tumultuous year. From the beginning of the year, it's just been a little bit of a rocky road all this time, and we're still sitting at a negative territory of 12.35% as of year to date. Dow Jones Industrial Average, no surprises, also is in a negative territory, but a negative 9.95% year to date. The NASDAQ, the last time I held this Insta Live, it was they were in the correction territory. They were minus 20%, so they've had a little bit of a bump upwards, but still nothing to celebrate. It's about negative 18.88%. Followed by the FTSE, which surprisingly throughout this volatility that we've been experiencing over the last few months has been kind of neutral, more or less zero for the most part. But now they're actually officially in the negative territory at negative 4.66% year to date, as well as the Nikkei, the Hang Seng, and the Shanghai, which are all reporting negative 13, negative 16, and negative 11% year to date. So a lot of reds everywhere, not exactly a lot of greens for us to celebrate. So on a global scale, we're not exactly, performing as per our ambitions at this point in time. Now, what I want to talk to you about today is obviously the elephant in the room. What's causing all of this volatility and market uncertainty? And it goes without saying, hint, hint, of course, it's a war in Ukraine. It goes without saying. And this just is basically the cherry on top to the already challenging environment that we have with the concerns of inflation and the rising or impending interest rates that we're going to be rising very shortly. Well, I want to talk a little bit more about the toll of this war, the impact that it's having on us, not only on a market perspective, but on our pockets. Also, maybe talk a little bit more about tactical investment decisions that you can make at this point in time. Now, we at Sarwa are very much, basically big fans of taking a passive investment approach, but for those of you who want to take a little more of a tactical, active approach, maybe I can kind of give you guys some ideas on how to kind of explore this idea today in this Instagram session. And of course, it goes without saying is what should we be doing overall as a consensus during this very volatile moment. So without further ado, let's jump right in, and thank you everyone for joining us today. I'm seeing again some more familiar names. Khalaf Mohammed, nice to see you. Sulfar, MM9.5, and Mr. Exactly. And interest rate inflation. Yes, we are going to be talking about this as well. It's Cherise, so thank you very much for bringing that up. So let's talk about the toll first, right? So look, aside from markets and what's happening in, to the cost of living and whatnot, let's not forget there's a human toll to what we're seeing today. Russia's invasion of Ukraine has at this point in time recorded over 549 civilian deaths, 41 of which were children as part of the United Nations. Now, there's additional 957 casualties, meaning civilians that have been injured. We're looking at a refugee crisis right now. The last time we saw something of this nature was with what was happening with Syria. And now we're seeing it all over again. And we're looking at possibly about 1 million refugees who are going to neighboring countries. And I'm familiar with this because we have members of our team here at Sarwa who are from Ukraine, who've been impacted directly and have had to take very difficult decisions and tried to help their families out in Ukraine. So definitely our hearts and our minds are with people of Ukraine, and also even for those Russian soldiers who are on the battlefield as well. Now, with regards to the financial toll itself, everyone here probably has experienced it in some shape or form. And I'm not even talking about the markets, but I'm talking about your pocketbooks altogether, because all around us, things just seem to be exploding in prices. Let's talk about energy and commodity prices, right? So this includes wheat and other grains. They've surged ever since this war, or even leading up to this war, between Russia and Ukraine. And it's already adding pressures to the inflationary pressures that we have, due to supply chain issues that we've had due to the COVID pandemic. This is, something that you just can't ignore. And of course, add, insult to injury, you've got the international sanctions on Russia's banking system. And what that means is that they've been excluded from many mediums of payments, such as SWIFT, for example, or not able to trade with certain countries. And that does not happen in a vacuum. Russia is actually, a significant exporter of many raw materials that we, basically consume on a day-to-day basis. So these sanctions are having a substantial impact on the global economy and financial markets. But the interesting thing is it's not even, right? You would think that, okay, this is what's happening, so everybody should be impacted, but it's not quite the story. And it's really odd how things kind of turn out, and kind of highlights the unpredictability of war in general. So, of course, let's go back to what we know right now, and what is impacting us in a negative fashion is prices of raw materials such as oil, wheat, aluminum, nickel have soared, and we've actually seen multi-year highs ever since Russia invaded Ukraine. For example, petrol. We've all seen the petrol prices rise not too long ago. In fact, Brent crude hit $119.84 a barrel last week before it subsided, due to some extra output that's being announced from the UAE and other partners as well too. But I don't know if anybody went to go get gas right before the announcement. There was a lineup right down the block at that point in time. So it's interesting to kind of see that and experience it ourselves. Also, interestingly, according to the U.S. Department of Agriculture, Russia and Ukraine combined actually make up 29% of the global export market when it comes to wheat. Bread, your saj, your manaish, all of these things are unfortunately going to cost a little bit more, because they actually are the greatest, one of the largest producers when it comes to wheat products, right? Even agricultural fertilizers. Right now, Russia and Belarus control more than a third of the world's potash production. And these are key ingredients when it comes to fertilizers that goes into growing what we need in the farms. So all of these things, unfortunately, are having a domino effect, and they're impacting us in our pocketbooks. And as I said, wheat prices have already jumped up. They're actually up 37% since February 23rd. You're looking at, wheat. So wheat is up 37%. Corn is up 15% from February till now. Aluminum. So now we start talking about the precious metals and, and industrial, metals and whatnot. Aluminum prices have jumped 17% since February. You've got nickel that's jumped 24% since February. You've got palladium, and I know probably something that people don't really talk about that much, but palladium itself is very important for a lot of tech gadgets and uses and industrial applications as well too. It's jumped up by about 20%. So these sanctions are having an impact on us and the wider world, in many different ways and fashion. And this is also going to likely impact corporate profits from US companies and also European companies, because at the end of the day, these high energy costs that they're incurring as a business are most likely going to be, impacting their profit, although they probably still will be profitable, but it might not be as attractive as they were in the past. And this, of course, is against the backdrop of high inflation figures, which was just released last week, where it was 7.9%. No, it wasn't really a surprise, because the markets were too busy paying attention to what's happening in the war in Ukraine. But nonetheless, 7.9% is a significant year-on-year cost of living increase, again, due to the pandemic. Now, well, we talked about things not being impacted on an even basis, but there was interesting benefactors to what's happening here between Russia and Ukraine. So Countries, receiving inflows of money let's put it this way. All the inflows of money that were historically going to Russia are now finding other destinations, right? So this capital injection of investments, whether it be, capital investment projects or, hedge fund, decisions or portfolio manager decisions, this money is being rerouted to other places around the world. And one of the first benefactors, believe it or not, is the US dollar. The US dollar itself has appreciated by 3% ever since this whole debacle started. And that's not normal to jump up in that short time frame altogether. So a 3% appreciation in the US dollar itself. And of course, there's a flight of capital happening, out of Russia. We've all been hearing stories about these oligarchs who've had their, significant, large yachts and bank accounts being, basically sanctioned or confiscated or whatnot. But interesting, there's also a large enough population of Russians who don't necessarily reside in Russia, may reside in other parts of the world, who are also looking for a safe haven to put their money in case they might be impacted from these sanctions that are occurring. So countries such as UAE, they may actually potentially be a place where some of that capital could be coming into. Maybe it could be into real estate, maybe it can be into investments. Even countries like Mexico and Turkey, for example, who have not imposed sanctions, by the way, who've opted to not decide to put any sanctions at all, they may also get an economic boost due to the trade ties that they may have with Russia. The last of which, as far as benefactors, would be the brain drain that's happening. So you've got a lot of Ukrainians who've been displaced. You also have Russians who are also, moving out of Russia. And there's a significant talent pool that may be relocating to other parts of the world, which is at a loss to Russia and Ukraine, but of great benefit to other parts of the world. Now, going back to what's been happening in the market specifically, we all know the S&P 500, the Dow Jones, the Nasdaq, all of these markets have been impacted quite significantly, and there isn't really a rock that you can hide under at this point in time. So what do you do in this case, right? Now, of course, at Sarwa, we always believe in, as I said, the passive investment strategy, having a long-term view, diversifying, but there are some individuals who may have the risk appetite to take a more tactical approach. And to this, I want to give you, a few ideas of how you can approach this. But I also want to ask, start off by asking a question, which is, well, we just talked about a number of different asset classes that have been increasing in value. I want to see if you remember them. But what assets have been increasing in price, either lead up to the war and since the start of the war? And I want to get this to start the conversation about a couple of investment ideas that you can kind of potentially go into. So individuals like yourself, Lumaitani, would love to hear from you. Larkin Lewis, let me know if you identify any particular asset that has been increasing in value. Doa, Tahbub, what has been increasing in value around you that you see? And I want to kind of highlight this from an investment perspective. So I'm all ears. Would love to hear from you guys if you basically have idea. Doa, right off the bat, commodities, bingo, bango, exactly. There's a great summary to it. So you've just taken the guessing game away from me, so much appreciated. Real estate, it is D, you're absolutely right. We've seen real estate prices rise. Now, I would say this has already been happening since last year. Gold, I am Farhan. Oh, great to see you again, I am Farhan. It's been a while. But real estate, going back to what you were saying, it is D, is that real estate values have already been kind of appreciating quite a bit since last year because of the excess liquidity that's been in the market, and individuals are also looking for safe haven or additional investment opportunities. So they've been diversifying into real estate. So we've seen this all across the board, not just UAE, but you look at US, Canada, European nations as well too. We've seen overall real estate assets appreciating. I wouldn't say it's more specific to what's been happening in Ukraine and Russia, but as an overall bigger picture, I wouldn't be surprised if that capital doesn't get allocated towards more real estate altogether. But to what Dua was saying, commodities, exactly. And when we say commodities, to give you an idea, you're looking at precious metals. So somebody here already mentioned gold, right? So gold, silver, platinum, right? That's one opportunity there. Oil, natural gas, corn, wheat, soybeans, and believe it or not, the next few, cattle. I'm not going to move here, but I nearly did. But cattle itself is a commodity in itself, and there's, people do trade cattle, and it's a significant market that comes along with it as well. Hogs and lumber as well. And hogs, we're talking about the oink oink. I can't believe I just said that, but nonetheless, that's exactly what it is altogether. Now, you can invest in commodities, right? And there's different approaches or different ways you can actually capitalize from what's happening in this market. Now, I have to warn you, it's not for the faint of heart because commodities can be quite volatile. And so be sure to understand the risks that you are taking before making an investment into specifically the asset class of commodities itself. And why is it volatile? Well, in the most basic sense, commodities are known to be risky investment because of the supply and demand factor. It's not just a matter of, the intrinsic value or the perceived value of a particular asset, but they're very price sensitive, right? And unfortunately, if there's any unusual weather patterns or any epidemics, disasters, both natural and human man-made, all of these will impact commodity prices. So it is, a rather risky asset class. But to give you an idea of how you can approach investing in commodities, if you wanted to take a tactical approach, is, for example, if anybody has their app, downloaded, the Sarwa app downloaded onto your phone, you can actually take a look at this yourself, because within our Sarwa Trade app itself, you have access to over 4,000 US stocks and ETFs. And some of these are actually give you either direct or indirect exposure to commodities, right? For example, there's one I just randomly picked up on my app today. For example, Mammoth Energy Services. Okay, Incorporated. What this company does, and it's a stock, by the way, it's a company that focuses on infrastructure, well completion, drilling services for the oil and gas industry. The acronym or the abbreviation is TUSK. This is an example of how you can participate in the commodities market through a company who participates in that industry altogether. Obviously, when there's a rise in commodity prices, these companies who are selling these commodities may need to work with third-party companies to either manufacture, produce, refine, whatever it might be. And these companies who may not be directly in that industry, but might be a industry related to it, may actually benefit from it. Another one would be, for example, you can find this again on Sarwa Trade app, is Tidewater Incorporated, right? Or TDW, if you're looking for the stock ticker name itself. And this company provides offshore marine support and transportation services to the offshore energy industry. This is an example of what you can find. And again, going back, this is more of a tactical approach. If you wanted to expose a small percentage of your portfolio to try to see if you can, benefit from the recent rise in commodities and hopefully the perceived, I would say hopefully from a investment perspective, but not necessarily from a day-to-day perspective itself. Now, examples of commodity ETFs, let's just say, TGA so far, thank you so much for highlighting that as well too. Very good to share. Sharing is caring so far, so thank you so much for that. There's also a way that you can just invest in an ETF, a commodity ETF specifically. So if you don't really necessarily want to, double down and concentrate your risk to any one particular stock, you can actually focus on ETFs that will be a basket of commodities that you can be investing in. For example, there's a really popular one by SPDR, which is a precious metals. It's a gold trust ETF. If you believe in gold, in its prospects and its future, you can invest directly into a gold ETF. Energy, for example, this is a big one. We've been talking about it. So you can invest in the United States Brent Oil Fund. BNO is the ticker for this particular ETF if you feel like you want to participate in the energy commodity. Agricultural, there's one, for example, in particular, it's called, and forgive me if I mispronounce this name, Tikrium Wheat Fund ETF, so the acronym is WEAT. This would be an example of how you can invest in the agricultural industry or the commodity itself, and commodity of wheat itself through Sarwa Trade, and it's an ETF. And the last example I want to give on this, just not to kind of beat a dead horse, would be industrial metals, for example. So rare earth metals, we've heard about this for many, many years. In fact, there's I think there's one or two countries who kind of dominate the reserves of rare earth minerals all around, or rare earth metals all around the world, which go into our phones, into our laptops, into all the other gadgets that we have. So yes, absolutely, these are all available on your Sarwa Trade. Now, you don't necessarily have to take a tactical approach, right? And it's one of the ethos that we talk about is about diversification. And so in our portfolios, when we've constructed them on Sarwa Invest, we made sure that there's great diversification, not only across geographic regions, but also across different sectors, of which would include industries that are going to benefit from the commodity price rises that we're seeing today, right? I'll give you an example. So in our ETFs, we have exposure to basic materials, right? And when I say basic materials by definition is the industry category made up of businesses engaged in the discovery, development, and processing of raw materials. This sector includes companies engaged in mining and metal refining, chemical products, and forestry products. We've just hit like 3 industries there. We talked about wheat, we talked about oil, we talked about precious metals. There's 3 industries included within the basic materials sector of our ETFs itself. Energy. It's a category of stocks that relate to producing or supplying energy. This is in your ETF itself. So indirectly, you're already actually participating in the commodity rise today. Consumer staples, and this is essential products used by consumers. So this includes things like food, beverages, household goods, hygiene products, and as well on those really down days, alcohol and tobaccos. Yes, that is actually included in in some of our ETFs. Of course, for our halal users, this would not be included in our halal investment users. This would not be in your portfolios, but for our conventional portfolio, that would be included in there. And to kind of give you perspective, I mean, there's so much more. Right? There's over 4,000 companies available in our US ETF provided by VTI. There's over 168 real estate companies in our REIT ETF that we use. We've got over 5,200 companies available in our emerging market ETF, VWO. And of course, you've got the bonds, right? Which are acting as your safe haven. You've got over 17,000 different bonds that you're invested in through our bond portfolio. And of course, our developed market ETF, you've got over 3,000 companies. I mean, you combine this, there's no greater level of diversification than this. In conclusion, and I want to really open this up to any Q&A and any comments or feedback that anybody may have today, and I really appreciate you guys sticking around and asking your questions so far and also participating. But in conclusion, look, you can take a tactical approach. And that's, you have the tools available to you through Sarwa Trade, and that you can pick and choose stocks that you're passionate about, that you can research and invest in. But if you prefer to kind of go down the passive approach, we're there for you as well. And our ETF portfolios do allow you to have greater level of diversification, and you will be exposed to the markets, from a commodity perspective. But what I would say is, look, the recent volatility right now, if you're a first-time investor, I'm with you. It's not exactly a great experience to just start investing and you're seeing the markets already going down to a negative territory. I can assure you, if you just stay patient and you stay strong and you have that vision for your long-term investment goal, you will be rewarded. The ethos of passive investing, or investing in general, is that those who invest and have a long-term view tend to succeed itself. Now, we'll kind of simplify it. Let's break it down to 3 different, outcomes of what is recommended in this case. Number 1, the markets are down, right? In fact, they're down to where we were back in June 2021, the S&P 500. So for those of you who've missed out on that opportunity and you have a little bit of extra capital that you would like to allocate, you're back to June 2021. You've kind of just literally gone back in time so you can get that opportunity again. So what we say is capitalize on this opportunity. If you're planning on investing anyways, don't wait for this market volatility to pass, because by the time it passes, you've already missed that upswing itself. So the greatest opportunity is now. Capitalize and invest now. So that's, option number 1. Option number 2 is remain invested. Do nothing, if anything else. Funny enough, your future you will thank your present you. If you just do nothing and ride this out, and I can tell you, for a number of our investors here at Sarwa who've been with us for a number of years now, who've experienced what happened to them in March 2020 with the initial COVID lockdowns when the markets dropped by 35%. Those who held on are kind of grinning today because they're like, here's another opportunity. And I know if I just stick around, if I do nothing, that I'll be vindicated and I'll be rewarded. So I would say stick it out. Don't panic. Challenge your emotional state and think rationally. If you owned a home, for example, and you live in it, right? This is your home. You've got your furniture, you've got your TV, you've got your favorite spot on the couch, whatever it might be. If the value of that house goes down every day and then goes up the next day and goes down the next day, do you really care? No, because this is your home that you've decided to invest in and that you want to own for many years in the future. You wouldn't sell it and buy it back every single day, would you? Right? So the idea is just to remain invested, remain calm, and things will work out at the end of the day. And for those, as I said, especially for our newer investors who may not have experienced market volatility like what we're seeing today, and you're pondering exiting from your investments, that's the greatest tragic impact that you can have to yourself, is by exiting from the market altogether. What I can suggest at this point is either have a conversation with one of our advisors, or if you have your own advisor, just to kind of get an objective view. What I'd probably think about in this situation is, rather than exiting from your investment, think about maybe reviewing your risk profile. It's okay. You don't necessarily need to have the highest risk profile. I mean, if you're not emotionally ready for it, that's okay. It's not a race altogether, right? The idea is that there's different risk profiles catered to every individual itself. It's about finding the path that works best for you, that's going to give you longevity. The longer you invest, the more successful you will be. So on that note, I would love to take some questions today. I've been talking a lot, and I apologize. It's been a couple of weeks. I was really eager and happy to talk to you guys. So let me just go look at to the app to see what questions we've gotten so far. I've got FH Al Saadi. He said, we need this presentation in Arabic, please. I'm with you. I agree with you. So we've got a couple members of the team who have actually been really eager on conducting these Insta Lives in Arabic. You know what? Let's do it. I'm with you. So we've got two gentlemen that I know of right now, three actually, who'd love to start talking about, doing Insta Lives in Arabic. We've got Faisal on our team. We've got Abdul Qadir on our team. And we also had just a new member of our team join us today, Mr. Rami Abu Fakar. Pleasure having you with us today, and he could also conduct these Insta Lives. So I'm with you. The other question is, I think it was more of a comment than anything else. Sherry said, yes, it's in a negative territory. You're absolutely right. Everything is in a negative territory at this point in time, which screams opportunity, right? You always have to kind of look at it on the flip side, right? If everybody else is selling, then you should be buying, right? That's the greatest opportunity that you have there. You're buying things on a discount altogether. Shuri also stated interest rate inflation. Yes, that is correct. Absolutely. Interest rate / inflation. So yeah, interest rates are expected to go up. In fact, there's an announcement expected by the end of this month of the final figure of what they're looking to raise the interest rates by. The common understanding is that they're going to increase it by 25 basis points. Some feel that this is just kind of throwing a bucket of water into a house fire, but only time will tell. I think the Fed is kind of taking a very cautious approach to this because they're thinking that maybe we can hold out a little bit longer before we start increasing interest rates. But you can't ignore those inflation numbers; they're quite up there altogether. There's a question here by Saad. He asked, where do you think the market is going? Now, I love that question, Saad, but at the same time, I am such a, how to explain this? My opinion doesn't matter, is what I'm trying to say. As much as you may value it and you may want to be curious, but at the end of the day, what my opinion is does not dictate which direction the market is going to take. The market is its own entity, and it's fickle, and it will decide which direction it will go in the short term, once we basically experience it itself. Unfortunately, I don't have a crystal ball, and I don't really spend a lot of time trying to predict which direction the markets are going to go in the near term, because my investment strategy and the ethos that we have at Sarwa is that invest as soon as possible, think long term, and in the end, you will be vindicated. So trying to predict in the short term when things are going to happen doesn't really add any value. Nobody has a crystal ball, whether it be myself, would be a very particular hedge fund, largest hedge fund in the world, most significant, most successful portfolio managers in the world. They don't have a crystal ball to predict what's going to happen in the near term. But what we do know is over the long term, this is the winning strategy. We're going to say here, Dua asked, can you schedule a session for beginners on how to use the trade feature? Actually, that's a really good idea. What we can do, Dua, is that we have this ongoing webinar that we do. It's called the 4 Rules of Investing. And it is pretty much predominantly Sarwa Invest basis. But what I can do is I can add a section in there on Sarwa Trade, or better than that, actually, I can kind of create a video and upload it either to our YouTube page or even our social media on, tips and tricks on how to use Sarwa Trade. There is a tutorial on our FAQ, by the way, on how to purchase a stock or sell a stock, etc. But nonetheless, I hear you, and maybe we can do something where we can kind of give a little bit of a tutorial on how to use it, make it a little more interactive, just to kind of enjoy it all together, right? What do we got here? Another question. So Amir, I think it's Amir, 3AMER, asked what Halal ETF with medium risk profile can you recommend? So, and I'm not sure if you're aware of this, Amaris, but we offer a halal portfolio here at Sarwa. In fact, there are 7 different risk profiles, all the way to a very conservative approach, which is predominantly sukuk, to a very aggressive approach, which is 7 out of 7 risk profile, which is basically all equities altogether, and you'll be invested across US markets, emerging markets, developed markets, and also have a little bit of exposure to gold as well. Now, risk profile is very subjective. It really comes down to, your risk appetite and what you're comfortable with from a volatility perspective. What's that standard deviation that you're comfortable remaining invested in? What I would encourage in this case, Amr, is that if you haven't done so already, go onto our Sarwa platform. You actually get a free assessment that tells you what's the ideal risk profile for you. It may well be a medium one, it may well be a high risk one, or maybe a conservative one. And it's very specific to your goals, to your appetite to risk, your investment preferences, and it will give you a recommendation right on the spot itself. Let's see here, another question here. So Saad said, asked all throughout history, it's suggested that the market always rides after a war. To what extent is this true in your experience? Now, I have to be honest in the sense, Saad, is I haven't been through too many wars. I know I may look older, but I'm not, that much older. But there is some element of this. There is some data to support this. In fact, there was an article that we just released not too long ago that was talking about volatility and talks about, what happens post-war. And there has been some indication that markets tend to rebound or bounce shortly after a war. And we're talking about, the Iraq invasion. We're talking about, Syria. We're talking about, I'm trying to remember off the top of my head, but there's a number of different occurrences that have happened. And basically the markets did, react very favorably, if not during, but definitely right after. So it's right in our blogs. If you go to our Sarwa blogs, it's our most recent article that talks about the correlation, if there is any, between war and what happened in the markets right after. So do take a look on that one. And I think it'll be maybe very beneficial for you to take a look on that one. I'm going to take maybe one more question because I'm a little bit over on time. Let me just take a look. There's a question here by Joey asked, I'm always hesitant to send money to my investment account because of the fear that if I leave the UAE or even Sarwa cannot continue operating, how can I mitigate my fear? A very fair question, Joey, and I completely hear you. I've been here for a while as well, and I've come across these conversations, a number of times, right? And the reality is, okay, number one, so when it comes to practicality, regardless of whether you decide to continue to remain in the UAE or you decide to relocate to other parts of the world, this platform is an international one. So you have access to it. There's no change in your services in any shape or form, regardless of wherever you go. So wherever you go, we will go with you. It's an international platform at the end of the day, so no fear, no need to fear about, if I'm going to be a resident or not. To give you perspective, we onboard non-residents every single day from different parts of the world. As far as Canada, we've got people from UK, we've got people from, all throughout the GCC who open accounts with us. So it's not a requirement to be a UAE resident here, to qualify for a Sarwa account. Now, when it comes to as far as issuer fear or Sarwa fear, keep in mind, at the end of the day, your assets are yours. And we actually don't have custody of your assets. And this is actually on purpose, right? At the end of the day, we want to give you peace of mind so that you know that in the event of anything should happen to Sarwa, regardless of whether we proactively decide to exit from the market or, some emergency happens and, whatever, right? Regardless of which, there is a set of guardrails already in place which protects your assets and gives you the flexibility of deciding to withdraw at any point in time or whether you want to take it over to another investment provider. And that is, number one, we use a existing broker called Saxo Bank for our Sarwa Invest portfolios. So they are the ones who actually execute all of the trades on your behalf. And what we do is basically just facilitate the transfer from our trust account here in the UAE and send it directly over to Saxo Bank so that it can be invested. Secondly, even Saxo Bank itself, they're very conscious about making sure that consumers are protected. And what they do is they utilize a third-party custodian, which is Citibank in this case. And Citibank, if you're familiar with it, they are one of the largest custodians in the world. They've got trillions of dollars in assets under management that they hold custody for, and that's what gives you peace of mind and security. This is the bedrock of investing. This is the the foundation, is what I'm trying to say when it comes to investing, is that banks, institutions, financial investment advisory firms, whatever it might be, they use third-party custodians, and that's exactly what we do as well. So regardless of whatever the circumstance, you are protected. And on that note, I just want to say thank you guys. It's been amazing catching up with you. It's been a good couple of weeks that I've missed you guys, and I do look forward to seeing you next week. Just want to give you guys a highlight on a very special Insta Live happening tomorrow. My colleague Faisal is going to be talking about cryptocurrency. So he's a Sarwa Wealth Associate here with us. He's a big fan of cryptocurrency. He's been participating in that market for many, many years, even before he joined us and before you even heard of him. And he's going to be a great value add. So do join him tomorrow. Ask your questions. He's really, really he loves talking about this stuff. So he'll guide you guys and give you an overview of what's happening in the crypto market and how it works and NFTs, etc., etc. So on that point, thank you so much. Take care. Have a good one.